Hi everyone, and welcome back to Next Generation Business School, where we empower future leaders in business and finance. My name is Amin Shakulu, and on this channel we dive deep into accounting principles, tourism accounting, financial management, business strategies, and economics insights. So stay tuned and let's unlock top strategies to help you excel in your studies and future career. Please don't forget to like, comment, and subscribe for more valuable content. And remember, every expert was once a beginner, and with the right knowledge and determination, you can achieve greatness. Your journey to success starts here, so let's get started together. Okay, today we want to have a tutorials about recording of economic scenarios, various and different economic scenarios under the perpetual inventory system in merchandising companies. So before starting to showing how we can record these economic scenarios, we want to have a general overview about the understanding of these transactions. As you can see, we have 8 transactions from Adventure Island Resorts that we need to record in the journal. And these transactions cover a variety of activities, including reservations, purchases, payments, and inventory adjustment. Each transactions affect the resort's financial result in the different ways. And here, a quick rundown of these transactions can be seen. As you can see on November 5, these economics events start from November 5. We're booking a corporate retreat and invoicing $2,000 with services cost of $12,000 take place. On November 8th, the economic scenarios is purchasing new kayaks and life vests on credit mode for $5,000. On November 12th, the economics events is providing the weekend gateway package and invoicing $8,500 with service cost of $4,500. On November 15th, paying $1,500 in cash for advertising services. On November 20, receiving cash payment for the corporate retreat book on November 5. The December 1 economic event is purchasing additional camping gear and tents on credit mode for $6,000. The December 5 economic scenario is receiving cash payment for the weekend gateway package providing on November 12. And finally, the economic scenario for December 9 is setting a $5,000 debt out for kayak and life vests. The final economic scenarios on December 31st is belong to the inventory adjustment data, where on December 31st the resorts conducted a physical counts of equipment and supplies and determining the total cost to be $93,978. However, the accounting records show an inventory value of $192,500 and the cost of goods sold is $720,000, and the discrepancy between what accounting document shows and what the real physical counts require an adjustment to match the physical count. Let's see together what we have to do for this tutorial. First, please prepare a journal entries to record the past transactions. We need to prepare journal entries to accurate record for each transactions, and this step ensure that the resort's financial records are up to date and reflect all recent activities. Also, we need to calculate the gross profit because in the part B, we need to find the prepared partial income statements that showing company gross profit for the years. And after recording of transaction, we prepare the partial financial statements, income statements, and gross profit. It is the crucial metric that shows the difference between net sales and cost of goods sold. And we use this given data, and this given data is net sales that is equal 1,275,000 and beginning inventory of $150,000. And with this data, we need to calculate the gross profit. So why this two part of analysis is important? Because understanding how to record the transactions, various and different transactions in the different economic scenarios and events, and also calculating gross profit is vital for maintaining accurate financial records and making informed business decisions. In fact, it helps in evaluating and resort profitability and operation efficiencies. And now we have an overview of the task at hand. So let's move on to the detailed steps of recording of these transactions in the journal and calculating the gross profit. Stay tuned and let's get into details. Okay, let's start from economic scenarios that take place on November 5. What happened on November 5? As we can see, on November 5, Adventure Island Resort booked a reservation for a corporate retreat, and they invoiced the groups the amount that is equal $20,000 for lodging, meals, and adventure activities. No, it is important to note that the resort records show that the cost of providing these services amount to the $12,000. Let's see how we record this in the journal. As you can see in this economic take place, some selling take place. They sell something, and this selling something take place in merchandising company under the perpetual inventory system because the selling take place, and the selling take place in the reservation mode. We need to record this selling in two levels: recording for the revenue, and number two is recording the cost of the services. And again, because this selling take place in reservation modes, one account that we have to do in the first level is accounts receivable. So let's start the first level of recording the revenue. First, we need to record the revenue from the corporate retreat booking. And because this selling take place in reservation modes, one account is accounts receivables. This account in this case is increase because the resort expect to receive $20,000 from the groups. So we expect that $20,000 we receive in the future. So accounts receivable is increase. Account receivable is belong to assets, and increase in assets account consider as a debit. The next account for first level of recording for recording of the revenue is service revenue. This account also increase, look like the accounts receivable. This account also increase because the resort has earned $20,000 from the booking, and increase in revenue, as we know, is considered as credit by the same amount in the structure of double recording rules. Okay, look at to the level 2, but before going to the level 2, we want to have a general explanations of November 5 economic scenario recording. By debiting account receivables, we are indicating that the resorts expecting payment from the groups, and generally crediting service revenue reflects the income earned from the booking. But what happened in level 2? In level 2, we want to record the cost of the services that is lead to revenue. Now we want to record the cost of the services. For recording the cost of services, under the merchandising company, we need to use the accounts of cost of goods sold. The accounts of cost of goods sold is used to recording the cost of services in merchandising company. This account increase because the resort has incurred cost of $12,000 to provide its services. So whenever the cost increase, unlike with revenue, it should be considered as a debit. So increase in cost and expenses considered as debit by $12,000. The next account is inventory. This account decreases because the costs and goods services provided reduce the inventory by 12,000. So in merchandising company, whenever we sell something, this means that we take it from the inventory and sell it to the customers. Because we take it from the inventory, the total amount of inventory is decreased. And decrease in inventory shows under the credit part. And the amount of credit is $12,000 in this case. In fact, by debiting cost of goods sold, we are recording the expense incurred in the providing the services, and also crediting inventory shows that reduction in the resort inventory due to the service provided. So there are you know that how we can record the selling for merchandising company in the two levels. And by accurating recording both revenue and the cost of services, we ensure that financial records reflect the true financial position of the resort. Let's look with together what is the next economic scenario and how we can record it in detail. Okay, the next economic scenarios take place on November 8th. On November 8th, Adventure Iceland Resort purchased new kayaks and life vests from the Oceanic Supplies Corporation for $5,000. This purchase was made on credit, and meaning the resort hasn't paid for the items yet, but has agreed to pay it later. And let's see together how we can record these transactions. Unlike the previous economic event, here the purchase takes place, not selling. And for the purchases in the merchandising company, we just needed to record it just in one level. There is no need to consider any cost of revenue that take place in the selling, and we need to record it in the two level, but here we just need to record the purchases just in one levels. So this purchase take place on credit mode. This purchase take place on credit mode or in on account mode. And this amount of purchase is $5,000. $5,000. So for this recording, we need to consider two accounts, and these two accounts is include inventory and accounts payable. Inventory and accounts payable. So for inventory, this account increases because the resort now has $5,000 worth of new kayaks and life vests in the recorded as a debit. So in the simple language, we purchase something and put it in the inventory. Because we purchase something and put it in the inventory, the amount of inventory is increases, and the value of this increase equal $5,000. So $5,000 considered as debit for inventory because inventory belong to the assets, and increase in the assets account considered as debit. The next account is accounts payable. This account increase also because the resort owes $5,000 to Oceanic Supply Corporations for the purchase, and it's recorded under the credit because accounts payable is belong to liabilities. Because accounts payable belongs to liability, and increase in the liabilities accounts consider as a credit. So increase in account payable, in this case, consider credit by the value of $5,000. This is what we have to do for November 8 economic scenarios. Let's look with together what we have to do for next economic scenarios. Okay, the next economic scenarios is take place on November 12th. On November 12th, Adventure Iceland Resort provided a weekend getaway package to the group of travelers, and the resorts invoiced the groups by $8,000 500 for the package, and the cost of providing these services amounted to $4,500. Let's look together how we can record this information. Again, for reminder, here the take place selling. Because the selling take place, we need to record these economic scenarios in two levels. The first level is belong to the recording of the service revenue, and the second level is belong to recording the cost of goods sold. For the first level of recording the service revenue, first we need to record the revenue earned from the providing weekend gateway package, and here is the accounts that we should use for this purpose. First, account receivable. As you can see, the account receivable in this case is increase because the resort expects to receive $8,500 from the travelers in the futures. So accounts payable receivable is increase. Again, account receivable is belong to the assets account, and increase in the assets account considered as debit. The next account in this case equals service revenue. The accounts is increased also because as the resort earns $8,500 from the providing services, the amount of revenue is increased. So service revenue or sales is increased, and always revenue increase considered as a credit in accounting standards. Okay, let's look to the next level, level 2. For level 2, we need to record the cost of goods sold. In fact, we need to record the cost of goods providing for the weekend gateway package, and this includes all expenses that incur to deliver services. And also, this account is increases to reflect $4,500 cost of providing the services. So increasing cost of goods sold, and the value of this increase is 4,500. The value of the cost of goods sold or increase. So increasing cost of goods sold considered as a debit because unlike with revenue, cost of goods sold considered as debit. Expenses, unlike the revenue, increase is debit. The next account is inventory. The inventory account decreases because the cost of goods services provided deducted from inventory. In fact, we take something from the inventory and sell it to the final customers. Because we experience a decrease in inventory, we consider this decrease as a credit because inventory is belongs to the assets account, and decrease in assets accounts considered as credit. By debiting cost of goods sold, we record the expense associated with providing the services, and crediting inventory reduce the inventory value by the cost of goods or services provided. So increase, 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 decrease. This is the order of the change in different accounts when a selling takes place in the merchandising tourism company. Okay, this is the economic events, and after these economics events, we want to consider what's happened in the next event we together. Okay, next event take place on December 1st. On December 1st, Adventure Iceland Resort purchases additional camping gears and tents from the Outdoor Essential Incorporation for $6,000. This purchase was made on credit, and meaning the resort hasn't paid for the items yet, but has agreed to pay it later. Okay, let's see it together how we can record these purchases. We need to find or relative to accounts for these purchases. And because the purchase take place on credit, we just need to one level and one account is payables because this purchase take place on credit, and this means that we buy it right now and pay it for later. So inventory will increase after this purchasing. Inventory is some sub accounts of assets, and increase in assets account such inventory consider as debit by $6,000. The next account is account payables, again because it take place in on credit or on accounts mode, and increase in account payables because account payables is belong to liabilities. We consider this increase as credit by the same amount. In the double recording accounting rules, it's become $6,000 credit. Okay, this is the economic events for December 1st, and we continue to the next economic events with together. Okay, the next economic scenarios or economic events take place on December 5. Let's look with together what happened in December 5. On December 5, Adventure Iceland Resort received payment in cash for weekend gateway package that was provided on November 12. The amount received was $8,500. And now we need to how we can record this receive of the debts from the customers. For this purpose, we need to consider two accounts. First account is cash because we get our money and put it in our cash. And next account is account receivables. So the cash account is increases because cash is belongs to the assets, and increase in the assets account is considered as debit by $8,500. And the next account is accounts receivables. This account also decreases because the resorts no longer expect to receive this amount from the travelers. So because we don't longer consider that this amount, $8,500, receive from the travelers again, because naturally they pay their debt one times. So accounts receivable is decrease. Accounts receivables is look like to cash belongs to assets. So all of these two accounts are belong to assets. But in one account, the increase take place, so it's become debit. And in the next account, the decreases take place. So decrease in assets accounts consider as credit by $8,500. In fact, by debiting cash, we are recording the increase in the resort cash balance, and crediting account receivable reflect that decrease in amount of out to the resort by travelers as the payment has now been received. Okay, this is the end of economics event for December 5, and we want to continue to the next economic event. The next economic events take place on December 31st. On December 31st, the staff of Adventure Iceland Resorts conducted a physical count of their equipment and supplies, and they determine the total cost of $190,000. However, the accounting record show an inventory value of $192,500. After verification by the result auditors, the physical count was deemed accurate. And now we need to adjust the accounting records to reflect this accurate count. So we need to recording this inventory adjustment. First, we need to recording this inventory adjustment because the accounting documents shows 192,500 amount, but the physical count of inventory shows $190,000. So first we need to find the difference between these two different amount of inventory. So 192,500 for finding the difference minus $190,000 equal $2,500. In fact, this is the amount of difference that we should record this amount. What we have to do for recording these amounts? For recording these amounts, for the purpose of adjustment, we need to consider two accounts. First, cost of goods sold. This account is increased because the discrepancy or a loss take place in the inventory and need to be accounted for and expenses. Because the inventory amounts, the real inventory amounts is lower than what accounting recording shows by $2,500. So cost of goods sold is increased. Cost is expenses, cost of goods is expenses and consider as a debit by 2,500. And also the amount of inventory is decreases because the real amount by physical counting is lower than what accounting document shows. So the inventory decreases by 2,500 and decrease in inventory is shown by credit. So generally, by debiting cost of goods sold, we are recording the additional expense incurred due to the discrepancy, and crediting inventory reduce the inventory value in the accounting records to match the physical count of $190,000. Okay, this is the end of economic scenarios, and in the next level, we want to find how we can make the partial income statements for the company. Okay, before starting to finding the partial income statements for the finding, let's review of what data we have already. So the net sales amounts is $1,275,000 and beginning inventory is $150,000. With this information, we need to follow this special structure or formula to find the cost of goods sold. Because for partial income statements, the cost of goods sold is important part. So we should start with the beginning inventory. In fact, let's start with the inventory value at the beginning of the periods. And the beginning inventory is what we have at hand on the start of the periods. The next step is adding of total purchases. Add all of the purchases that made during the periods is give us the total goods available for sales. So beginning inventory, whatever at hand at the first of the period plus total purchases during the period equal total goods available for sales. After finding the total goods available for sales, we need to deducting the ending inventory. So total goods available for sale less ending inventory. In fact, the subtract the inventory value at the end of the periods, and this tell to us how much inventory is left. So how much inventory is left? And finally, we add adjustment due to the physical cost, and the adjustment is just the difference between accounting record and physical count. And if there is a discrepancy, and in this case we have discrepancy between our accounting records and physical counts, we need to adjust for this difference, and this ensure that we record the reflect data that is match with reality or real amount of inventory. So after introductions of general structures, we want to use the numbers and put it in these structures and calculate with together what is the final amount of cost of goods sold. Okay, let's calculate with together the real amount of cost of goods sold. So let's start with the beginning inventory. The beginning inventory value, according to the informations of the questions on section B, is equal to $150,000 minus purchases take place during the year. Sorry, plus the purchases take place during the years. In fact, after finding the total amount of beginning inventory, we need to add the total purchases. But what is the total purchases? The question not ask what is the total purchases directly, and we need to calculate it by ourselves. So we have two purchases during the economic events or scenarios. First was take place on November 8th, and next was take place on December 1. We need to find what is the total amount of November 8th, $5,000, and December 1, $6,000. This $5,000 is spent to buy kayaks and life vests, and this $6,000 is spent to buy camping gear and tents. So $5,000 plus $6,000 equal $11,000 is the total purchase that take place during the period. So beginning inventory is the total amount of inventory at hand at the first plus the purchases, total purchases that take place during the periods. 150,000 plus 11,000 equal 161,000 total goods available for sales. Now we arrive to the final station, but generally we have two stations, and our final station is cost of goods sold. So we need to continue our journey from total goods available for sales, that here is equal 161,000, minus ending inventory. The ending inventory, according to the informations of the case, equal 93,978. Ending inventory, or the inventory is remain for us or left at the end of the periods, equal 93,978. So $161,000 minus or less ending inventory 93,978 plus the difference between accounting records and physical count or adjustment due to the physical counts, $2,500 equal 69,522, the total amount of cost of goods sold. Again, total goods available for sale, $161,000, less than ending inventory, $93,978, plus the amount of adjustment due to the physical counts, $2,500, equal $69,522. Now we have cost of goods sold, and we need to use the cost of goods sold to make the partial income statements. And we passed 90% of the route to making the partial statements until this moment, and just one simple operation remains to make the partial income statements. Okay, the final steps in this lecture is finding the partial income statements. Net sales according to the information of the question. That all of this information I show it to you by these signs, and these signs means that this information is presented in the questions and we don't make any special operations to find this information. So net sales according to the information of the case equal $1,275,000 minus the cost of goods sold that we calculated in the past operations 69,522. $1,275,000 minus 69,522 equal 1,205,478. The total amount of gross profit in partial income statements of the tourism institutes. Okay, in this lecture we have some operations about the recording economic scenarios and making the partial income statements, calculating the cost of goods sold, and what is the structures and roles in these subjects. Thank you for attentions, and we will continue our journey to the different part of accounting for merchandising company in tourism institutes. Let's come with me and continue these lectures. Thank you so much for your attention.